Hello, everyone. Happy Sunday. This is Simon with AvaTrade. I'm very excited. We're coming back to our weekly webinar. It's been quite a week, and we're having another great, eventful week in front of us. So we'll go through things today. And we'll discuss what happened last week, and we'll prepare ourselves for the upcoming things. A few things about myself. My name is Simon Friedman. I'm a senior account manager with AvaTrade. And I started to trade in June of 2000, so it's almost 24 years for that exciting journey for me. After 11 years of prop trading, I moved into a different way of trading, also started to mentor and educate others, and currently I'm very happy, have a great opportunity to assist our customers at AvaTrade. The agenda of the webinar, we speak about indices, stocks, commodities, and currencies. In addition to that, we'll talk about a little bit of fundamentals. We'll discuss economic calendar. And the idea of this webinar, as I always like to say, it's prepare ourselves, make a plan. And as traders like to say, you plan your trade and then you trade your plan. And that's the bottom line. It's important to be prepared for anything, especially for trading. Risk warning. You can find the full statement at avatrade.com. What we'll do here is purely educational. Of course, we do not suggest any trades. Social media. I encourage you to follow us at Telegram or also Twitter, which is X now. And my favorite, as I like to say, YouTube channel. You can find so much there. You can find a lot of educational materials, tutorials, and all the webinars that we do are being posted there. So if you haven't missed a webinar or if you just want to look back and watch past webinars, just get on YouTube, get to AvaTrade channel and find whatever you're looking for. If you are watching this on YouTube, please click on likes. If you do like it, of course, please feel free to share, subscribe as well, and click on that bell so you'll be notified when new things are coming in. About last week. So as you know, sometimes I like to take the screenshots. This one is from the Market Watch. And so you could see here, big tech drives S&P 500 to the best week since November as investors shrug off inflation worries. So what it means, it's a good article. You can find it and read it. The idea is that market kind of trying to give up this struggle of making up when is the next interest rate hike or whatever, not the hike, the cut they're hoping for. But some actually predict they could be a hike as well. And we had some earnings, some great moves in the market. S&P's had a good move. NASDAQ had a good move as well, driven by tech stocks. And at the same time, we had the inflation data that's not so pleasant for the market. But like I said, like the article says, that it looks like the priorities are being given to the earnings. And I just want to quote here from someone called Samir Samana. He's the global market strategist at Wells Fargo Investment Institute. So I quote here, the gross domestic product report released on Thursday had people on edge as it showed that during the first quarter, economic growth slowed while inflation picked up, according to Samir Samana, senior global manager, strategist, at Wells Fargo Investment Institute. And he continues that that sparked worries over the risk of stagflationary environment, he said by phone on Friday. Now, stagflation, something that I read some articles last week about it. When the economic growth slows down, but the inflation is growing, that's a tough environment for the market, potentially. And so that's kind of all that together, slowdown in GDP and increase in something that the Feds are watching for as the PCA, the personal consumption expenditure, it went up. So it was worrying to the market, but then the earnings kicked in and especially the Google had, or Alphabet's the parent company, had a nice move of 10% on Friday. And other companies moved. Microsoft moved 1.8%, Nvidia bounced 6%, Amazon plus almost 3.5%. So all those things kind of overtook the worries about the just the word is really difficult, stagflation. Okay, so we'll go today through a lot of stocks. I prepared some things that I did some deep research. We'll talk about stocks, upcoming earnings in some stocks. We'll go through indices, of course, as usual. We'll go through some commodities, and of course, FX. We'll go through things, especially I will pay attention to Japanese yen. I'll tell you a story. And we'll take a quick glance at Bitcoin at the end. Okay, so before that, let's take a look at economic calendar. We have two major events. We have the FOMC press conference right after the interest rate decision, which interest rate decision is kind of priced in. We won't have any changes this time. It's already priced in, I guess, by the CME tools that predict Fed's moves. So that's the FOMC press conference, of course, very important, and we have non-farm payroll. So those two things are very important, but we'll go through all of them. And before that, very important to mention, especially to new people, the importance of economic calendar. First of all, what it is, it's a source, it's a public information that the dates and the kind of consensus is known before the time, and of course everybody's waiting for the real numbers. Here, what I do, I just take out the high impact events as they're important. There's so much more. You can filter through them. You can choose whatever's relevant to your trading. As I said, I'm taking here only high impact events. So it's important to know certain things are happening. It's your choice whether you trade into the news, after the news, before the news, whatever it is. But knowing these things are happening is very important. I think it's crucial, so you won't be caught in certain spikes without knowing that what's the reason for it. Okay, so Monday we have CPI numbers from Germany. Tuesday, a lot of data here. We have retail sales from Australia. We have manufacturing PMI from China. We'll talk about China when we get to indices. Retail sales and GDP numbers from Germany. Then we have European Union numbers. We have also CPI numbers here, GDP numbers, and that's from European Union, bunch of numbers coming out. We have employment and unemployment numbers from New Zealand. That's on Tuesday. Wednesday, it's a big day for the Feds. First, we have the ADP employment change. That's some call it kind of an indication of what the NFP will be. It's a different agency reporting how many jobs were added. We have manufacturing PMI numbers right after, and then here what I do, by the way, this is the GMT times. You can choose, you can filter through it. You can find it on our website, in the web trader or the mobile platform, or just Google economic calendar, any provider is good. So we have the interest rate decision, as I said. The consensus is unchanged at 5.5%. Then, of course, right away, they'll announce the monetary policy statement. And as usual, 30 minutes later, something that will create volatility in the market. Usually it does, like everybody's drilling the chair of Feds, Mr. Powell or Chair Powell. He'll be answering and addressing different questions. So it's important everybody's watching how he reacts, what he says, his body language, everything's very super sensitive. So as you could see, each word moves the market up and down during that press conference. And it's a good experience. If you never experienced FOMC, you can just Google it on YouTube. You can find a live press conference anywhere. Just Google it, and it usually pops up on the FOMC channel on YouTube. So just watch it and open the chart next to it, and you will see. Again, the markets are jumping during the press conference. The most sensitive is, of course, the equity markets. US dollar is sensitive. Gold is sensitive to it as well. And, of course, other instruments. You'll see what's happening there. Thursday, we have trade balance from Australia, consumer price index or CPI from Switzerland. And Friday, big day for NFPs. According to this, they're planning or they're expecting 243 jobs to be added. Last month, we had a report of robust numbers, 303,000 jobs added. And it's not here because somehow they don't mark it the high, but they're expecting the unemployment to remain at 3.8%. So this is the economic calendar. Excuse me. We're going to move now to the trading platform, and we'll go through it. We'll start with indices. As I said, we'll start with China. China finally broke through that resistance. We did close. If you remember, we mentioned if we need to close in order for Chinese index to go higher, we needed a closing about this 12,272. Why that number? And that's where the sell-off started back in November. We played with this a lot. And finally, after closing there, as you could see, the impulse came in. Friday, we moved higher. And we closed at 12,462. I just want to take a quick look at here. 12,512 and a half. Let's see. That's our next test. Okay. So let's see how we start the week. Here, we had a spike on October 12th before we sold, and we are getting close to that number. Also, as I mentioned to you, I don't know if I did actually, but now it's clear here. We had a 50-day moving average crossing above, and for some analysts, this is kind of Bible in trading. Maybe it's a strong statement, but they do pay attention to these things. When the 50-day moving average crosses above the 200, they call it a golden cross, and that triggers some technical buying, similar to the opposite thing here. When the 50 moves below, it creates the sell signal. So after when we were from June, almost a year it took to reverse, right? So we crossed in June below, and from June of last year until a few days back, it took a long time to go back. Again, it doesn't mean that it's certain, but the technical traders are really watching these things and paying attention to it. So it was a big accumulation here. We did try a few attempts to break above this level, the previous resistance from which we made intense sell-off. And we played around that level for a while. And so the first time we retested, it was March 12th. Since then, we were going zigzagging a little bit, but really trying to push through this level. We did close on Thursday, Friday with the impulse. So we're going to be watching this 12,512 and a half for possible retest. If you look at the weekly chart, some traders might actually take this as a head and shoulder or cup and holder, which is in this case a bullish formation indicating possibility of move to the upside. it could be, again, there's always the opposite scenario possible. If we dive below that level again and start building resistance again, all these buyers that got caught in this impulse to the upside would probably get disappointed and start selling. So both scenarios, of course, as usually, are possible. So that China, now as you know, especially if it's not your first time, when I show China, I go straight into four assets, which is gold, copper, Australian, and New Zealand dollars. So let's take a quick look at oil. Oil did react to it on Thursday to the upside, and Friday was a flat day on oil. Now again, oil is sensitive to what's happening in China, as China is being one of the biggest users, and they're not producing oil, so they're just buying it. Unlike US it can produce its own oil as well. So we had a move on oil to the upside. Copper is super strong. We mentioned it. It is continuing running. Each correction brings the move higher. So as you could see here, we're clearly in an uptrend. It's a steep uptrend, so at some point we might see a sell-off. But again, take a look here on copper. We did come to the end of May level, which is very crucial here. A high here was 457.35, and we stopped on Friday right on that level. So again, I like the levels. This is the old school trading. Pretty much historical levels sometimes work. Sometimes they don't, of course, but traders look at it in a very simple, practical, and logical way. Something stopped the price from going higher here back on May 29th. So there's a chance, again, pay attention, there's a chance, no guarantee, that when the price reaches that level again, the same sellers might be still there, or new sellers might come back hoping that that's the top. So the high here, as you could see, on May 29th of 2022, we're talking about 2 years ago almost. The high was 457.35. And take a look. The close was 20 cents lower, and the high was actually went about $2. About 2 cents higher, but we came right back and closed below. That means that this level still holds. So, of course, two scenarios. There's no third. The price not gonna just freeze. So we could continue higher from here, especially if China has another spike up, continues higher. It could trigger that buying here. Or looking at this chart, we rejected that even though we had the spike above it, but we did reject that resistance here. So we might be actually going into a little bit of a correction. Now, as long as we're making higher highs and higher lows, we're in good shape, looking upwards. If we do break that pattern, we might see correction, and let's see what happens. So anyway, copper is very, very interesting to watch here. So we spoke about copper, oil, and let's take a quick look at Australian dollar. It's been also strong, even though US dollar had a little bit of recovery towards the end of the week. The Australian dollar is in green against US, and New Zealand dollar had a move as well, not as strong. So again, it looks like I jumped from indices to commodities and FX, but that's important to know. The moment you watch China, you want to see those two assets right away, as they tend to react to Chinese market. Okay, so that's as far as the Chinese index. Now, the Japanese index reacted to weakness in the yen. It did move higher here, bounced from this 100 moving average recently. US indices, of course, as we said, they had a very nice week. Green in Dow Jones, US 500 or plus 500, S&P 500 had a nice week, as well as the slide said, the best week since November. And Nasdaq had a nice week as well, driven a lot by tech stocks. So the question is, what's next? And I think this week with the Feds and the press conference and NFPs will definitely give us an idea what's next. If you take S&P as a general indication of equity markets, it's the most diversified one. We are between the 100 and the 50 moving averages. If you take on the weekly chart, we had the 3 weeks of sell-offs, and we've recovered this past week. I mean, visually, if you look at it, maybe around 70%, 65, 70% from the last week's loss. We're still selling here, but that's the weekly chart. Now, if we take a weekly, I just want to take a quick look using the Fibonacci retracement. So on the weekly chart, we did retrace the first mark about 23%, and we bounced. So let's see. There's a lot of excitement, a lot of positive vibe on the market with the tax and everything else. So we might see continuation of this recovery. Maybe it was a normal correction and it will continue higher. If you remember a few weeks back, a lot of analysts were very bullish on S&Ps, showing different kind of targets for the end of the year, 5,500, 5,400, some hoping for 5,700 towards the end of the year. So let's see what happens. We're in a good, interesting time now with all the controversial things, right? So between the Feds doing or not doing things, now it's back to earnings. It's really jumping from one to another. So Germany also had a nice recovery this week. And UK had a nice move. We continue to the all-time highs. We just made a new all-time high on UK FTSE, and it's driven a lot by, as I mentioned last week, I think, the deputy of the governor of Bank of England, he was talking about the inflation looking much better than they expected. So they're actually looking into cutting the rates very soon. So on that, the FTSE reacted up, and the British pound sold. We'll take a look when we get there. Okay, so that's as far as indices. Let's take a quick look at the individual stocks and see how they finished Friday and the week. So we had Google. Where are you? Here we go. Alphabet of Google. It's a huge gap up. It was up on Friday, I think 10%. It gapped and then sold a little bit, but as you could see, it's a very significant move to the upside. And I think they just reached for the first time market capitalization over the $2 trillion. So that's a big achievement for them. Microsoft. It was a gap down and then a gap up. The earnings. Nvidia. I'm gonna go and take you now to the MT5. Nvidia is showing here. Nvidia had a nice bounce. Here we go. It's the recent sell-off that ended the previous week. We went to 755 this week with the mixed trading. Then Friday with the huge move to the upside. Nvidia was up 6.18% on Friday, and Amazon was up as well. Here's Amazon was up. By the way, Amazon is one of the reporting this week. It's reporting on the 30th. This time it just went up on general moves in the market, kind of in sympathy, they call it, with other tech stocks. kind of a pre-earning moves to the upside. So that puts pressure on Amazon, of course, when they do report. So those are the stocks that reported, and as we mentioned, they took the markets up. On the other hand, we had Netflix and Intel selling. Let's take a quick look. Here comes Netflix. Netflix sold. They had actually good earnings, but what really spooked the market is that they said that starting next year, they will not be really showing or reporting the number of users added. And I guess Wall Street didn't like that. So that's on Netflix. And Intel doesn't look good at all. It was down 9% on Friday. And Goldman Sachs analysts, trying to pronounce the name, Toshiya Hari, maintains Intel with sell and lowers the price target from 39 to 34. I mean, we're already trading below that. So Intel, as I mentioned before, I think a few weeks back, that they're not doing so well. And there was an interview with the CEO where he said that they're spending a lot, they're building new factories, and by 2027, by 2030, the earnings are going to be amazing. So kind of selling promises, in my opinion. Again, he could be absolutely right. It's a solid company. It will be bouncing, but investors are looking for good news all the time. And that's the pressure of being a public company. You have shareholders, you have boards of directors and other things. So it doesn't look good. So that's your Intel. Boeing having a hard time. You could see here, it bounced with the gap up on, I think that was Wednesday, and sold again. There were a few things. On Wednesday, the rating agency Moody's, they cut Boeing to Baa3. And I just dig deeper here. And also the S&P Global Ratings, they cut Boeing from to negative from stable the very next day on Thursday. So it's something they say they might not be able to pay the debt the way the things are going. And there are a few analysts also from Citigroup. There's Jason Gursky. He maintains Boeing with the buy and lowers the target price from 252 to 224. And Deutsche Bank analyst Scott Doschley, I might mispronounce the name, I think, maintains Boeing with the buy and lowers the price target from 240 to 225. So it looks like they are looking for Boeing to come to around 225. Currently, the last price 167.28. Also, I went through some data. There's a lot of bearish activity in the options and other things. So as you could see, Boeing has been suffering. And again, for the new people and people that don't really know about the company, they've been having a lot of issues, technical issues with some physical damages to the plane while flying. And they've been really, excuse me, going through a lot of investigations and issues. So let's see how Boeing deals with these issues going forward. Another controversial thing is Tesla. They did report lower earnings and revenues, but the stock went higher after there was an earning call. And I just want to read. I'm going to read this to you, and it's from Benzinga. The source of this news is Benzinga. I'm going to read a quote. After the string of price cuts across its markets, Tesla chose to make peace with investors by reaffirming that that it would roll out the low-end model. Analysts have emphasized the importance of affordable EV in boosting Tesla's sales from the current slump. The company announced an accelerated start of production for new model, moving it up from the previously stated second half of 2025. It will incorporate elements of both the next generation platform and its current platform, and it will be manufactured using existing production lines. And I'm continue quoting this. Tesla reported a double miss, underperforming relative to both first quarter earnings and revenue expectation, with the free cash flow sinking into negative territory. This prompted even bullish analysts to take down the estimates for the company. And I continue quoting here. Tesla confirmed on its earning calls that the Tesla Semi, which is now being sold exclusively to PepsiCo, will be manufactured from a new factory in Reno, and first deliveries to external customers will begin in early 2026. Now, Tesla Semi, those are the trucks, some people call them 18-wheelers, huge trucks. So as of now, there's a monopoly, only Pepsi company is using it. But according to this information here, they say that starting the early 2026, they'll start selling it to other companies. I think it's a big thing, and I'm not the only one. As you could see, even on the bad earnings, I think the investors are buying that promise here on the cheaper models, and the semis coming in or kicking in soon. And of course, one of the big things, it's the self-driving. Speaking of which, as I was preparing for the webinar, the Bloomberg notification just popped up on my phone, and it said, and I'm quoting here, that Elon Musk is in China on an announced trip to discuss the rollout of Tesla's self-driving software. Okay, so he's still working on the China market a lot. So that's positive. Now, on the negative side, also, it's important to know this thing. According to Barron's, and I'm quoting here, the National Highway Traffic Safety Administration has opened an investigation to assess if Tesla's solution to address a December recall of more than 2 million vehicles to fix the autopilot system warning was good enough. So they're opening now the investigation. They just want to make sure that whatever solution was made or fixed involved the 2 million cars being recalled on autopilot. So apparently, I don't see any negative here for now, but who knows, maybe they'll find something that will be affecting negative. So in any event, we had a nice bounce after sell-off here. It was a big sell-off, and in general, according or based on, or comparing to most of the stocks, Tesla is not doing well this year at all. I mean, just from December, we were at $465. We give away about $100, even more. The previous week, we were as low as 138.63 here on the 22nd, the beginning of the week. But it was a nice bounce from 139 to 170. It's a nice move. Let's see if that's sustainable. Okay, that's as far as Tesla and Elon Musk. Another thing concerning the stocks, it's important. I'll show it to you in a moment. So we have one of the biggest pension funds in the US. They announced as they have to report the changes. So they made change in the investments, and the name of the pension fund is State of Michigan Retirement System, and they bought more AMD stock. Where are you? Here we go. And that's the Advanced Micro Device. They involved in hardware. Of course, they are also focusing on AI. So we might see a move up in the stock. It had a nice rally here, but lately it's been selling. So a big fund with deep pockets announcing it might actually create a buying in this stock. It did have a little bounce on Thursday and Friday, but nothing serious. Let's see if AMD has a move this coming week. Also, according to the source of Barron's, they tripled the stake in Walmart. Walmart, as you know, recently they had split, and the stock is sitting around the split price around 60. So they tripled the stake in Walmart. So we might see new highs in Walmart, and also they sold the General Motors stocks. So definitely I will be watching GM, especially since they had a nice rebound. If you remember all the stories with the strikes of automakers and everything else. And definitely we'll be watching. So this is as far as this State of Michigan Retirement System Fund doing kind of reshuffling of their positions. Pfizer, also important. I'm going to switch back to 54. Where are you, Pfizer? Could see Pfizer sold here on Thursday, and I was trying to find out what's the story there. And it looks like GSK, that's the GlaxoSmithKline, I think it's a European company. They're trading on the New York Stock Exchange as ADR. So they filed at Delaware Federal Court something they call alleging patent infringement. So they are taking to court Pfizer and BioNTech. They said that something of them using their technology with the COVID-19 vaccines. So in pharmaceuticals, an announcement like that could be very drastic, as you could see here. The stock fell, and let's see how they deal with it. Maybe they just pay off the GSK out the court. Maybe they'll go to court. It might take time for that. It's a serious thing when it comes to patents and other things with pharmaceutical companies. So, by the way, Pfizer is reporting this coming week. The earnings, they are reporting on Wednesday. So, combination of earnings coming in and them being taken to court for allegedly breaking some patent laws. Okay, and as we're already in pharmaceuticals, I want to take a look at our Teva. Since recent correction here, we had a nice move to the upside, and we had 2 consecutive days, a nice strong update or uptick, and we closed at 1380. Just to remind us, especially new people that are not aware, we speak of Teva regularly, pretty much. And as we mentioned a few weeks back, some analysts are setting up the price target at around $19. We are trying to break out of this consolidation, accumulation, whatever you want to call it, that lasted for 5 years since we fell into this territory. It took us 5 years trying to come out. So we'll continue watching Teva. Okay, and if already at this, before we finish with the stocks, just want to go through a few of them that are reporting next week. So on Tuesday, we have AMD, the one we just mentioned. So not just the fund buying them, they're also coming out with earnings, and that's on Tuesday. AMD, very important. Amazon is coming out with earnings on Tuesday as well. As I mentioned here, they already jumped up in sympathy to other stocks moving higher. So we'll be definitely watching Amazon. If the earnings are great, we might see a move higher from here. If the earnings are disappointing, definitely the sell-off will follow. Wednesday, We have, by the way, it's a biggest earnings. I think last week we had 150 companies. This week, more than 150 companies out of S&P 500 are reporting. So a lot of earnings coming in. So these are just a few things that I mentioned here. We have on Wednesday, we have MasterCard and Pfizer reporting. This is MasterCard. Looks like we're between the 50 and 100 moving average. Let's see what report will do. Stock Pfizer, as I mentioned, is reporting this week as well. The stock's been beaten up, and this last move by GSK just added to the downside pressure. And we have a big day on Thursday. We have Qualcomm. Tech companies are reporting. We have Qualcomm on Thursday. Of course, we have our famous Apple stock reporting. It's been beaten up with the China issues and other issues they've been having, especially with the slowing sales on the iPhone. So the stock is still up on the year, I think, or it's not. Let's see. No, it's not. If you remember, Apple was the first stock to reach the 3 trillion. Then Microsoft took over. And then since the issues with China, products being banned and slowing in sales, pushed the stock lower. So let's see what earnings will bring us. I'm just trying to figure out the levels here. It's hard to. We're already lower than this previous support at 165.60. And we're closed. Yeah, we're already lower than this level. So we're sitting. This is the weekly chart, right? We're sitting below all the moving average. The 50 is below 200. A lot of downside pressure on Apple, I think. Let's see how this earnings will play for Apple. It looks like a lot of pressure there to the downside. Another one reporting on the same day on Thursday is ConocoPhillips. I don't think we ever spoke about the stock, but they are reporting. And Moderna, another one of pharmaceuticals, is reporting on Thursday as well. You could see pharmaceutical companies have a lot of tails. Every little news is affecting the stock. By the way, Pfizer, speaking of news, besides them being taken to court, I think they just got an FDA approval for one of the treatments. But I think the negative news overpowered the positive one. So let's see how it works. Okay, so we did spend a lot of time on stocks. So I didn't mean to bore you with it, but it's an important thing, especially for people focusing on equities. So we're going to run through commodities and Forex really quick. So as we said, copper has been super strong. We analyzed that already, so I'm going to stop there. It's been strong, and we're sitting at this strong resistance level at 457.35. Gold is kind of playing with these 333 numbers, 2,333. We are sitting right there. I think this week, Powell press conference and the NFPs to give us an idea which way we'll go, including on gold. Oil, we spoke about oil, responded to China move to the upside. And of course, the geopolitics in the Middle East, it's very tricky. I mean, normally, years back, decades back, oil should be now probably higher than here, 130, but they're not really pushing it higher as normally, because the Middle East is not the only producer these days. So let's see if we have new developments geopolitically or China or anything else. And of course, the global markets, which way they're going to go. Palladium, important to watch palladium. We are approaching that key level of 950. If you remember, we had a few spikes from this level. We have a lot of fights around this level. After this lower high, which made lower low here, and we approaching the 950 again. We'll be watching how palladium reacts to it. Natural gas, we just had the new contract rolling in. And as I mentioned to you, sometimes we're trying to close the gap. Sometimes we'll do the opposite this way. First we went higher, and now we're on the way to possibly close the gap between the contracts. Let's see how that works out. Cocoa, very interesting. We're still in the uptrend. We're still making higher highs, higher lows. Here, after making lower high, we still didn't make the lower low. So we're still, the trend line looks upside. Let's see how this week plays. Again, for new people, cocoa is moving higher on a pure fundamental. It's a physical lack of the product caused by the weather, drought, and other things. El Nino is one of them in West Africa. So let's see how cocoa plays this week. Sugar. We didn't speak about sugar for a while, but what caught my attention that we really are selling here. And on the weekly, as here, we're sitting on the 200 week moving average. On the daily, as you can see clearly here, we keep on making zigzagging high, lower lows and lower highs. And here, I would really watch this level here. This was the first bounce after pretty much all red to, is that many weeks? 4 consecutive weeks to the downside. So this level here, the low of 1916, I would be really watching that. You see here, every time we get closer, they kind of push it higher. So I would watch that definitely. And to the upside, I would watch this level where this previous sell-off stopped, was around $20.12 right here, 2012. So we are in this channel for now. So we could easily break down and continue lower. Always a possibility. Also, we could consolidate here, accumulate a lot of market here, and then continue to retest the 2012 to the upside and possibly move higher. So we'll start focusing on sugar and watch what's happening there. Okay, moving to Forex. Dollar had the bounce on Friday. Dollar index, we are almost 106, 105.93. All the indices, we're above all the indices there. Again, this week, as I mentioned, when speaking of gold, with the press conference of Powell and NFP numbers, we should see some serious moves in the US dollars as well. Before I forget, very, very important, the yen is just flying. It's a funny story, as I mentioned, I want to tell you. There was a press conference this past week of the governor of Bank of Japan. I cannot pronounce his name, and I can't really try to remember it. The previous one was Kuroda. I remember he was there for years. So this guy, I was watching the press conference. First of all, he's very old. I don't know how old he is. He's very slow in speaking and his reaction, and he's probably a good guy, but he's very, very old, and that's my observation. Secondly, I don't speak Japanese, definitely don't understand Japanese. So, and I couldn't find anything in English, and I was watching it on YouTube live. And funny enough, I downloaded this app, translation, and I tried to translate it as they went. So I caught a few moments there. So I couldn't really make sense of what he said, unfortunately. But I caught one phrase when he said that they are currently happy with the current levels of interest rates. And I think that was something that the holders or the traders in yen didn't like. And yen just continued falling. Take a look at the last 30 minutes of the trading. Huge move in dollar higher against the yen. So the yen has been super, super weak. talking about decades weak, and it's continuing getting weaker. So, as I mentioned on a few occasions, even though he said they are comfortable about his previous things, he was contradicting himself. So I'm not sure what's the story there, but logically speaking, as Japan is buying everything outside and they are paying in US dollars, so I'm not sure if they are comfortable, and the level of living expenses that should be super high now, as people earnings in yen and to buy everything that comes from abroad and pay in dollars. So I'm not sure how it works, but just running across the board, take a look at the moves. All the currencies against the yen are flying higher, all of them. So let's see. It's a crucial week this week. I don't know if this move will continue. We just broke through all the previous highs. It's the weekly chart. CHF JPY. Look at Australian dollar. By the way, after US, Australian dollar has been the strongest this week. Some reason. I know the reason, as we mentioned, it's China for sure. China bouncing is big for Australia. Just to explain to new people, especially, that Australia or Australian dollar and New Zealand dollar, for that matter, they're called commodity currencies, as they sell a lot of products to China. So, but that's yen. Again, we'll be following and we'll see if we continue higher. It's been super weak, and as I always mention, the Bank of Japan is famous for their interventions. Maybe not the interest rate change, but the interventions are very famous, and they come out of nowhere. So I wouldn't be surprised if we see some spikes in the opposite direction this upcoming week or the weeks. See, like these tails here. That's the interventions. Okay. The majors, very simple. We are, as I promised to mention to you, the pound sold recently on that comment of Deputy of Governor Bank of England. Slowly we are recovering, but we're hitting this 200 moving average from below. So it looks like we are having resistance around here. Previously, we had a channel that went for a while between 126 and 128. Euro is also bouncing after a recent sell-off, but we're far from the key level of 108, where a lot of actions were happening. USD CAD is sitting around this level for pretty much for the whole week. Let's see how this week plays. As I said, Australian dollar bouncing nicely. It's very strong lately. New Zealand dollar trying to bounce, but not as strong as Australian. And Swiss franc is remaining weak. Just to remind us, recently they became pioneers in cutting the rates. Swiss National Bank was the first one to start cutting the rates, and that triggered the weakness in Swiss franc there. And also what caught my attention is the ZAR, South African currency. It's been strong in the past few days as the dollar got a little weaker, but the dollar bounce on Friday, actually ZAR got stronger. As we're getting closer to the elections there, maybe it should be something with politics, but it looks like this level around 1916. So you can see here a lot of actions around this level. The moment we dive below, it accelerates the selling. So we are now around 200 moving average here on USD ZAR. Let's see what happens there. Okay. That's as far as Forex. And let's take a quick look at Bitcoin. Here we go. Now on Bitcoin, normally I don't have any news, but now I actually do. And you know what? I'm going to show it to you. So we'll read it together. Now, this is from the article, I think from Barron's. And this is serious. So let's read it quickly together. The price of Bitcoin fell to a low of 62,801 early Saturday from 63,476 late Friday after the Depository Trust and Clearing Corporation, DTCC, announced it will not allocate any collateral to exchange-traded funds, ETFs with exposure to Bitcoin or cryptocurrencies, and will not extend loans against them effective April 30th, 2024. The DTCC is a financial service company that provides clearing and settlement services for the financial markets. The decision implies that financial entities utilizing DTCC's clearing and settlement services will not be able to use cryptocurrency-linked ETFs as collateral when seeking credit or engaging in similar financing activities through DTCC system. The change is expected to affect how these ETFs are treated in terms of financial stability and credit assessment. I think this is big because all this moves based on ETFs. It doesn't mean that people will start really getting out of it, but the truth is they already did. And according to some sources, they said there was a big, not a big, I don't want to misinform you, but there were significant outflow from the ETFs. So pretty much in simple language, you go take a loan and you have some collateral. You have, I don't know, a bunch of golden coins, or you put your house as a collateral, and the bank is happy to give you the money or lend you the money against your collateral, because if you don't pay back, they just take your possession away. Now, in this case, the ETFs were used for the same purposes. So some entities, I guess, use those ETFs to borrow money or leverage the funds or whatever that is. But now, based on this DTCC, I told you the truth, the first time I'm hearing of them, but they are a serious entity, I guess, Depository Trust and Clearing Corporation. So now they said, no, it's not good enough because it's a volatile instrument. It's not secure enough, and we will not accept it as collateral. So let's see. It could be a trigger to sell off. It already did. As of now, we speak, this is a live thing. So let's see. The previous support was here at 59,572, and the last time we tried that was 9 days ago. Let's see if we do that. If not, if they just shake off this news and continue higher, also a possibility, as a lot of people are excited. Okay, so that's the Bitcoin, and that wraps up our webinar today. Again, just to put it together, we had a busy week, some good earnings offsetting the worries about the Feds. We had Google or Alphabet running, and some other tech stocks running. We have another 150 plus companies reporting this upcoming week, and we have two key events. One is on Wednesday, the FOMC announcement on interest rate and statement, and more important, the press conference 30 minutes later. And we have NFP numbers and unemployment data on Friday, which would give us more of an indication what the Feds are looking to do. I want to wish everyone a good weekend, whatever's left of it, and get some energy, prepare yourself for the upcoming week. Don't forget about the social media channels. If you are watching on YouTube, give us some feedback, write your comments, and all the best. We'll see you next week, God willing. Take care.